The Bank of Canada is slowing the pace of rate cuts. So is this going to mean that there's going to be an economic boom? Or do they not even understand that we're actually in economic collapse? I think you know the answer to this, guys. It's the latter here. So I want to wish you all a happy new year. And we're just going to get into this because it's kind of unbelievable. The Bank of Canada is saying that they're going to expect a more gradual approach now to interest rates. Obviously, they came in and cut rates last month. But it's very interesting what the Bank of Canada is saying here, because obviously that means that they think, oh, well, you know, these interest rate cuts have been stimulative and now the economy, it's okay. And I'm not saying I agree with them cutting or I disagree with them holding here. I'm just saying that they have no idea what they're doing here. And I just want to make that clear. They really don't have a clue. And a lot of it is just virtue signaling. In fact, most of it, because the bond market, as we're going to get into, just ignores what they say anyway. So the Bank of Canada cut its benchmark interest rate by 50 basis points. So if we get into that on a chart, you can see what happened. We're now down at 3.25% for interest rates in Canada. If you look at the Fed, they're at 4.5%. So you're talking about 125 basis points divergence now. And you basically, if you pull out the Canadian dollar, is down 8.41% in a year. So that is a huge decline for a major currency. And I just want to add here as well, because they're saying inflation is at 1.9%. There is a huge cost to the Canadian dollar declining like this, which is either jobs or inflation. So you've got to kind of take your pick, and it's going to be either one or a combination of two. Obviously, I think it's a combination of both, because guess what? If companies are buying in dollars and their dollar is declining, they need more dollars to buy those goods. So guess what happens is if they can't charge the consumer more for those products, so say the Canadian dollar is down 8.41% in a year, if they can't charge the consumers at least that, then it's coming right off their margins. And we know that small businesses and businesses across Canada are suffering, apart from the oligarchy. So guess what? That means that that's got to come from somewhere. There's got to be some savings. So basically the business owner is losing that money. Unlikely. He's just going to trim staff. And that's exactly why layoffs and the unemployment rate is also going to continue to go up. It just adds another tailwind to that, which the Bank of Canada doesn't even understand. In fact, they think that the Canadian dollar declining is good, because that means our exports are going to be cheaper. I mean, I don't know what planet they live on. It's really, really ridiculous. So the move, widely expected by markets and economists, brings the bank's policy rate to 3.25%. They basically said, with the policy rate now substantially lower, we anticipate a more gradual approach to monetary policy if the economy evolves broadly as expected. And it's not going to do that, guys. I just want to tell you that right out the gates. It's not going to evolve as they've expected, just as over the past couple of years, it didn't evolve as they expected either. I mean, they're constantly revising their forecast down and down and down. And, you know, even the GDP numbers that they look at, the unfortunate thing is, and one of the reasons why I do this channel to educate people, is all these numbers are so fake. Until we actually fix the numbers that are coming from these agencies to reflect actually what's happening, then guess what? You're going to have the Bank of Canada making ridiculous decisions because they don't have a clue where inflation really is. They're told it's at 1.8%. The reality is it's probably at 4 or 5%. So they shouldn't be cutting rates because of that. And again, we wouldn't be in the situation we're in with the housing bubble and everything else if they were actually following the real inflation rate over the past 5, 10, 15 years. So, you know, the situation we're in now is due to the fact of these corrupt, broken figures. And I think people need to realize that. So they're saying the Bank of Canada is done with the big guns now. And I don't think they are. And the 5-year government bond, it hasn't really done anything since they started cutting rates. This is is a 3-year chart, so it was around July. So initially it dropped, and it's kind of been exactly the same. So the 5-year mortgage, which is the most popular mortgage in Canada, guess what? That's based on this bond and also risk premium as well. The risk premium's going up. This bond is practically flat. So the Bank of Canada cutting rates, it's only really having an effect on those variable rate mortgages, which people are taking out. Otherwise, people with the 5-year fixed, which gives people a little bit of stability, but still trying to predict what's going to happen in 5 years. I mean, I wouldn't do it. It's a hell of a risk that people are taking just going in real estate market right now. If you look at the 10-year as well, which is interesting as well, you pull it out to a 3-year chart here, and it's exactly the same story. The 10-year practically flat. It has not done anything since the Bank of Canada started cutting rates. And I've said this before, the bond market, most of the bond market just ignores what the Bank of Canada says anyway. Like, the Bank of Canada tries to virtue signal that they control everything just like the Fed. They just control one thing, and that's the overnight lending rate. Everything else is actually controlled through bond market and free market operations when they're allowed to be free markets, because obviously they intervene all the time, which we know. So the Bank of Canada to trim rates 4 times, that's what economists are saying after the GDP numbers that came out. Obviously, I have to say, these GDP numbers, they are really low. But the thing is, they're not realistic, because you have to look at inflation. They take these numbers, the nominal numbers, and then they deflate them with the inflation rate. But the thing is, the inflation rate they're using is fake. So that means these numbers are fake. So the economy is way worse than these numbers are saying. And the GDP per capita, because of the population growth that we've seen, it shows how the standard of living is collapsing in Canada. How you import the third world, guess what? You're turning into a third world country as well. You've got rising crime and all the different things that third world countries have. Poverty levels are absolutely skyrocketing, food banks, many things that we've talked about before on this channel. So Canada's economy likely contracted in November. I mean, I can't believe how any economist says that, but that is why I will never be on the mainstream media, because I'm never going to toe the line and say something like that. I'm going to say, yeah, the numbers came out and they said it likely contracted, but realistically, guys, it's absolutely collapsing. Let's think about it here. Do you really think inflation's at 1.8%? Is that what you're going to say? So anyway, that's what's going on, and people need to realize these numbers are fake. So Statistics Canada released an advanced estimate suggesting that gross domestic product fell by 0.1% month over month in November. And this is just a preliminary estimate, and we're talking about November. So there's a lag effect with all the data as well that the Bank of Canada has fed, even though it's fake anyway. So it's the first contraction of the year and a slowdown from October, when GDP grew by 0.3%, beating both analysts' estimate of 0.2% and the agency's flash estimate of 0.1%. And you have to remember, guys, as well, the Bank of Canada thinks that these rate cuts are stimulative. And they've said that actually a couple of times when they've been cutting rates before, but it just hasn't materialized. In fact, the economy continues to get worse, and that will continue because of the housing bubble imploding, because of the immigration bubble imploding, because of the government bubble, which may start imploding in 2025 as well, when the Conservatives get in it, if they decide to shrink the government. So it'll be really interesting to see how this goes on. So the Canadian economy appeared to lose its strength toward the end of this year as the central bank cut interest rates at a rapid pace. And again, you have to look at the divergence here. 3.25% in Canada. In the US right now, you're at 4.5%. Where are you more likely going to put your money right now? Because in the US, if you just put it in a money market fund, or if you buy their government bonds, you're getting a significantly higher rate than you are in Canada. And also, if you look at all the fake data, and it does show us an idea of trend, even though it's fake, we know the economy is worse in both countries than the data actually suggests. But regardless, you look at the data in both countries, there's also the economic risk that is going on in Canada as well. And a lot of people, especially people in the Forex space, probably don't even realize that the housing bubble and the real estate bubble is imploding, and what a huge risk to the banking system and the economy that actually is. And we've already already seen banks taking significant hits like TD for money laundering, and that's without all these loan loss provisions that they're now shrinking, thinking that's going to be a good idea. So again, the currency down 8.4%. Do we really think inflation is at 1.8, 1.9%? I mean, I think that is just utterly ridiculous. And it's going to be really interesting to see what the Bank of Canada does here moving forward, because really they're in a tough spot right now with the currency really declining and the economy also declining, the threats of tariffs and things that are just going to add to inflation. It's really just a terrible situation that Canada is in. And guess what? Even if inflation is low right now just because the economy is collapsing, well, guess what? If the economy actually starts to tick up, inflation is just going to skyrocket because the underlying tailwinds for inflation, they're really there. Like the currency declining, like the fact tariffs could be coming. So all those different things, that means that as soon as they get a chance to raise prices, oh, they're going to raise prices and inflation's going to skyrocket. So inflation isn't a thing of the past. It's just going down right now because the economy is collapsing. So all these Western economies, they're really in a tough spot. It's not just Canada. And we'll have to continue to monitor how these central planners react and how they behave and what they actually do, which will really be interesting over 2025. Because unfortunately, when you really look at this realistically, 2025 is going to be even worse, economically speaking, than 2024. So strap in and get ready. I know people are prepared on this channel, so I don't have to warn you. So anyway, if you've enjoyed this video and want to help protect your privacy, go to expressvpn.com/marketmania. Also helps out the channel. You can get early access to content and videos at buymeacoffee.com/marketmania. Join the inner circle there, and I will see you on the next one.